Welcome to lesson 4 of the 1% playbook. We have got a very important lesson today. This is our area of interest lesson. This is where a price gets to and decides to react. This is where we are taking the trade, right? So last lesson we talked about the overall trend, we talked about market structure, we talked about if how to distinguish if the time frame in the market is bearish or bullish. So what I have here is I'm still here in Euro USD and our overall time frame is bearish. So now since we've gotten the time frame, now we're going to be looking at getting the area of interest, where we're going to be selling. So we know we're going to be selling, but where, right? So we're going to be getting our weekly area of interest, we're going to be getting our daily area of interest, and we're going to be getting our 4-hour area of interest. So area of interest also falls into our top-down analysis. Go from top, our weekly time frame, down to our 4-hour time frame, seeing where our areas of interest are. So let's say we have an area of interest in the weekly. Price respects the higher time frames more than the lower time frames. The stronger the time frame, the more price is going to respect it. So an area of interest is a zone where we expect price to react. It doesn't mean that it's going to have a reversal, but if we are selling and we are following the trend of the market, more than likely it's going to react in our direction. Why? Because the overall trend is in our direction. We're trading with the trend. So here on Euro USD, I see an area of interest. Now here on Euro USD, we have identified this is bearish, so we're going to be selling. So I want to look for an area of interest between where my lower high is and my lower low. Our lower high is here. Oh, lower high is here, and our lower low is down here. So we've got our lower low and our lower high. Okay, so we want to look for an area of interest between these 2 points. When we're looking for an area of interest, we want to look for 3 or more taps to around the same area. It's an area of interest. It's almost like a zone. Okay, get my little box right here, my little area of interest box. So I see an area of interest right here. I like this area right here. So I only use the bodies of the candles. I don't use the wicks. Like that blue. Where's my blue? There it is. So I only use the bodies of the wicks. So as you can see, price has gotten into this area of interest or this zone. You may hear the term area of support and resistance or order block or supply and demand zones. All of these are the same thing. Don't complicate it. It's the same thing. I personally like to use the terminology of area of interest because that's where price has been interested most. So an area of interest consists of 3 or more touches to the same area. So as you can see, let's get our circle here. We've got one here. We've got our second here. We've got our third here. I just count all this as our third one. We've got another one here. We've got another one here. And then we just created another one here last week. So this area of interest consists of 1, 2, 3, 4, 5, 6 touches. So if we are selling this market, we want to be below this area of interest. If we are bullish and we are above an area of interest, we want to be buying that market. But this is perfect because we are currently below this area of interest. So we're going to wait for a retest, a pullback, where price pulls back to this area of interest to then sell. It's really that simple. I mean, we've got 5 or 6 taps here, and the more taps, the better. The more taps, the more respected this area is. And we are in the weekly time frame, which is even better. That means price is respecting this area of interest very highly. Okay, so we want to make sure that we are finding an area of interest in between our lower high and lower low, since we are bearish and looking for sells. Okay, and we did. We found that area of interest. All we're waiting for now is price to have a retracement or have a pullback so that we can then sell the market. If we look over here, what has happened previously? When I'm doing my top-down analysis, I always like to look in the past. Let's see what happened in the past, right? So we've got this pullback right into this area. This happened, let's see, this happened back in December, late December. It's like the last week in December, we had this same exact move. Price was up here at this area of interest. Price reacted to this area of interest. Price pulled back. See this wick? Price pulled back, and then we had a big sell-off. That's exactly what we're predicting here, is the same thing. Price has reacted last week. Now this week, we're waiting for the pullback to then enter so that we can catch another big move to the downside. I am currently aiming for just a 1 to 2. I've got a nice healthy stop loss, which is above the previous wick and above all the previous candles here at this area of interest. So this trade by Friday should make me anywhere from $16,000 to $20,000, depending on if I continue to hold. That could give me a 1 to 3 if I hold till these lows down here, which we could end up, we could actually create another area of interest or an area of support and resistance. So when the area of interest is above price, it is resisting price. When it's below price, it is supporting price. So I'll show you here. We've got, let's see where we want to put this area of interest. See that? It's pretty good right there. Okay, so we've got another area of interest right here. And you see how quick I can just look at this and I'm already like, okay, I see touches, touches, touches. That's how I want you guys to be. I want you guys to be able to look at it. Okay, we got 1, 2, 3, 4, 5. We've got 5 touches of this area of interest. This is a very valid area of interest because we have 3 or more touches. Price has been interested in this area and reacted to it 5 separate times. So let's go ahead and get our circles here. So we've got 1. Make that a little bigger. Got 1 here. Got 2 here. Got 3 here. I don't know if you would count this. You can definitely count. It's a huge rejection. It reacted to this area. Put it right here. So we've got 4 separate touches to this area right here. And then we've got 6 up here. So right here, we are in a very strong zone of support and resistance. So when price is below, or when our area of interest is below, we have bounced off of this, creating support. So this was an area of support. This is an area of resistance to where price is in between both of these areas of interest. So when price was here, we bounced, actually broke below, then it was resisting this area of interest. Why? Because price was below the area of interest. So it supported it here, resisted it here. Does that make sense? And then when price broke back above this area of interest, it supported price again. So when price is above the area of interest, the area of interest is acting as support. When price is below the area of interest, the area of interest is acting as resistance. Okay, so right here we have support, support, broke below, resisted, broke back above, came back down, was used as support, came back down, resisted right here. Put another one right here. Resisted this area of interest over here, came back around, broke above, and since price was below this area of interest, we can now see that it is resisting. So if it's resisting, we're below the area of interest, we want to sell. Since we kind of looked at the charts a little bit and found our area of interest in the charts, let's go up here, and I'm going to create a little line chart here so that we can create a little area of interest. Okay. So if I were looking at this, and if this were a chart, and I'm looking for 3 or more taps to a certain area, be looking at something like this right here. I like this. So as you can see, our overall trend is bullish. We were bearish. We had our lower high, lower low. Then we broke above, now giving us a higher high, a higher low. Broke above that higher high, and then giving us a new higher low. So I already know automatically we're going to be buying this market. I made an area of interest. I see that we have 1, 2, and 3 taps to this area already. Now that we are above this area of interest and we are buying because we are above the area of interest, we are bullish. We're going to wait for a retracement into this area, just like so. Wait for a retracement, wait for some type of reaction, wait for our candlestick to reject this area, and then get in on the buys at this point right here. We're going to catch this next candle. So we put in our long position around this area right here. and we're going to catch our buy position and aim for our 1 to 2 risk to reward. Just like that. Okay? Remember, you want to find your area of interest between your higher low and your lower high, or your higher low and your higher high. We found our area of interest. We waited for price to come back into this area. This is where we bought. We got our entry signal. We're going to go over entry signal. And then we knew that we were buying this market. So, why did we know we were buying? Why did we know we were buying? Well, for one, the trend is what? Trend is bullish. Okay? Two, our area of interest is below price. Three, we have a valid area of interest of 1, 2, 3 touches. And four, we would, of course, wait for rejection around this area right here. Let's say we got rejection and we got our rejection from our area of interest. And that just shows us that price is reacting at that area of interest again. So this is why we were buying right here. Trend is bullish. Our area of interest is below price. Price is up here right now. Area of interest is down here. The markets give us a pullback. Market pulls back. It has to breathe to continue to go up or to continue to go down. In this case, we are going up. So the market, just like it did here, broke above. We're going to pull back into this area of interest or into this zone, get our entry confirmation, we get our rejection. We're going to make sure that price is reacting to this point, that we're staying bullish, and then we are going to buy. And it works the same way with selling the market. It's this exact same thing, just reversed. You always want to wait for it to pull back to your area of interest. You don't want to get trigger happy, press the buy button while you're up here, because then you would be entering up here. Now look at your stop loss. It's at your area of interest. You don't want your stop loss at your area of interest. You want it below your area of interest. So price has room to breathe. Wait for it to pull back so that you can have a nice, sufficient stop loss so the price, if it needs to, come down into this area, move a little bit, breathe a little bit, come back up, retrace, and then, of course, continue to the upside. Okay, you always want to make sure that you are using risk management. Very, very important. We've got a whole lesson dedicated to risk management. Finding your overall trend of the market, finding your areas of interest correctly, your risk management, and then your entry signal. You master those four, you're going to be making money in the market. I'm gonna write that down. I'm gonna type that for you guys. So we've got one, find the trend. Find the overall trend. Two, find your correct area of interest. Make sure you have at least 3 touches to that area. Make sure that price is above your area of interest so that price can pull back and react in a positive way, creating support. And make sure your area of interest is between your higher low and higher high. In this case, in this case, since we are buying, buying and we're bullish. And three, make sure you wait for your entry signal. We're going to go over those entry signals. Okay, so you master these. I think I put 2 and 3. I guess this is number 4. I guess I put 2 and 3 together right here. But I guess I combined them into one. So we've got find the overall trend. 2, find your correct area of interest. Make sure you have at least 3 touches to that area. Make sure the price is above your area of interest so that price can pull back and react in a positive way, creating support. And make sure your area of interest is between your higher low and your higher high. In this case, since we are buying and we're bullish. And then make sure you wait for your entry signal. Okay? You do that and you can master trading. At that point, you're just getting experience in the market. You're waiting for your setup. Patience. Oh, I can't express that enough. Patience in the market is so important. Waiting for these things to check off. And I'm going to give you guys an entire checklist of everything that you need to wait for in order to buy the market or in order to sell the market. It's that simple. Okay? Patience is key. Patience pays. This right here is so important. You guys just wait for these things to check off. And if they don't check off, you don't take the trade. I mean, it can be as simple as that. Now there's times where, you'll take a riskier entry, but you don't have to. Patience pays in this game. The more you trade doesn't mean the more you make. The more it's all about quality over quantity. We'll put that as well. Quality, quality over quantity. We want to make sure that we are taking the high quality setups, A plus setups. If we're taking high quality setups, we're going to win a whole lot more than just taking a bunch of trades that halfway meet our our checklist, right? We want A plus setups where one win turns into another and another and another, and you'll have a loss in between there. Always make sure that your losses are never bigger than your wins. Always make sure that you are winning and your wins are bigger than your losses. That will keep you profitable. Okay, so putting everything together now. Putting everything together. We're going to one, identify trend. Two, mark areas of interest. Three, wait for price to return to our area of interest, to area of interest. Four, enter the trade on confirmation. So the example of a bullish setup is one, uptrend, two, mark areas of interest, three, price pullback, and four, bullish engulfing candle. That's our entry signal. Our entry signal is a bullish engulfing candlestick at your area of interest. That's when you know, okay, we're going to keep going to the upside. We are going to keep buying this market. Price pulled back. We got our engulfing candlestick to now continue to the upside. And same way with a bearish setup. So now, bearish setup. It's just opposite. Got downtrend. Two, mark areas of interest, which will be used as resistance let me do that up here too. So just so that you guys have this. So mark areas of interest when you are in a bullish setup, which will be used as support. Okay, mark areas of interest which will be used as resistance. And then three, wait for price to pull back into area of interest zone or area of interest, same thing. And then wait for our bearish rejection. That consists of a bearish engulfing candlestick at our area of interest. All right. So does that make sense? Our areas of interest, how to find them, and when we're buying and when we are selling. So kind of recap everything here, kind of putting everything together so you guys can screenshot this. Okay. So you want to buy on that pullback, get our entry signal confirmation, which we'll go over more in depth in one of the later lessons. But we want to buy at the area of interest, wait for an engulfing candlestick. Wait for an engulfing candlestick. That you know we are going up. That's your entry signal right there. That engulfing candlestick. Now you know we're going to the upside. Now price can, might have a little wick. You can get on the wick. I like getting in on a wick pullback. It just gives you a little better entry. But that when you get that engulfing candlestick, 9 times out of 10, we're going in that direction. If you have your technical analysis correct, if your areas of interest are set in the highest probability areas, the highest probability areas are where price has been the most. So right here, we have 3, we're above the area of interest. So we're waiting for our price to pull back to then buy. It's as simple as that. And then you sit back and enjoy the profits. Just watch the numbers go up. Remember, always be 100% okay with what you are risking because there's always 100% risk of losing whatever you put in. All we can do is predict the market. We can predict where it's going to go based on price action in the past. So my practice plan for you guys is to go through the charts, pick a pair. I don't care which pair you pick, but go and find yourselves areas of interest. Okay? Find yourself areas of interest. Areas of interest. You want to do this on the weekly, the daily, and the 4-hour. Remember, the 4-hour, the daily, and the weekly are your strongest time frames. They're going to be the time frames that you want to base your areas of interest off of. If you have it done in the weekly, that is your strongest time frame. The daily is your second strongest time frame. I really don't ever use a 4-hour area of interest because it's not as strong. It price does not respect a 4-hour area of interest like it does a daily and a weekly. I love my weekly areas of interest. That's why I'm in love with this trade so much because we're at a weekly area of interest. Very strong weekly area of interest. We've got 1, 2, 3, 4, 5, 6 taps to this area, and this week's creating this week is or last week created its 6th tap into this area here. So I love how we're bearish, how we're at a strong area of interest, and I love how we are already rejecting, as you can see, this area of interest. This bearish candlestick right here to the right, confirming to me we are reacting to this area, just like we had here, just like we had here, just like we had here, just like we had here. Okay? So I'm going to put everything in one picture here so you guys can screenshot it. So you guys can note it down so that when you're looking at the markets, you don't feel confused. You can always look back at these notes and go over what we have talked about. Yeah, I hope this is helping you guys. I mean, this can truly be the this can truly be your greatest source of income. I mean, you can get to a point to where you're making this your where you can escape your 9 to 5, where you can have that freedom. I mean, I take my wife on trips and we go see her family, which they live halfway across the country. So just being able to have that freedom is something that is worth putting every ounce of effort into this. But you guys, I hope this helped. This was lesson 4 of the 1% playbook. I hope you guys enjoyed it, and I will see you guys in lesson 5.